Hi, Stan the Annuity Man. Today's topic is who has the best fixed annuity rates. Now, with that being said, there's not just one answer to that because there's numerous types of fixed annuities. So we're going to go through all of those and then we're going to figure out how to quote those and find out which one is best for you and then who does have the best rates. And also, please watch this video on how do interest rates affect annuities. Boy, that's a good topic. You need to know that as well. So we have a ton to cover today. What is a fixed annuity? We're going to go through all of the types of fixed annuities available. I'm going to tell you the two questions to ask, the only two questions you have to ask to determine what type fits your specific situation. I'll tell you the acronym that you need to use to determine whether you need an annuity or not. Then we'll talk about where they fit in your portfolio. And at the end, if you hang in there with me, I'm going to tell you how to get all 7 of my published books for free, no obligation, no cost. So let's get started. So what is a fixed annuity? Regardless of type, it's a principal protected product, meaning that whatever money you put in, somebody's going to get that back, whether it's an income annuity or one for principal protection. A key point with fixed annuities, they're not affected by market downside, market volatility. So it's kind of a peace of mind product. It's a transfer of risk product. So how many fixed annuity types are available? It really comes down to 2 categories. One is income for life. So the fixed annuities available for that category are single premium immediate annuities, which solve for income now, deferred income annuities, which solve for income later, qualified longevity annuity contracts, which solve for income later. When I say income later, I'm saying income starting at a future date. And you can also throw in income rider benefits that you can attach to policies that also provide future income later. Now, the 2 fixed annuity types that solve for principal protection are number 1, MYGAs, MYGAS, which is multi-year guarantee annuities, which is the industry's version of a CD, works pretty much the same. And then the second product available for principal protection is a fixed indexed annuity, which too often is sold as a market product. It's not. It's a life insurance product that historically has provided enhanced CD type returns, but those are the 2 that protect for principal protection that you can buy for principal protection. So let's go over them again. For income, it's single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts, and a little asterisk on the income riders. And then you have, for principal protection, multi-year guarantee annuities and fixed indexed annuities. So the question is, who has the best rates? There's really no good answer to that. As I always say, there's no good annuity answers, just bad sales pitches. Remember that. So who has the best rates? It really depends on the product that you're quoting. Now, for multi-year guarantee annuities like CDs, I have a list at stantheannuityman.com that you can pull up and look at your state and see which are the, who has the best guaranteed rates that pay you every year, just like a CD. Indexed annuities are a little bit different just because there's no guarantee on the return. It's principal protected, but the rates really come down to the limitations on the upside, and we'll show you who has the best on that as well. From the standpoint of income, when you're quoting fixed annuities for income, single premium immediate annuities, deferred income annuities, QLACs, and even income riders, those are commodity quotes. You have to quote every carrier out there, as many as humanly possible, to find out who has the best contractual guarantee for your situation, and understand that these quotes change like a gallon of milk. 7 to 10 days from now, the quotes will change, and if you haven't locked it in, you got to get it requoted. So there's nobody that has the best rates. They change, and that's the reason you have to shop all carriers and not fall in love with one, and not allow your advisor or agent to show you just one. Understand they're commodity products. You buy them kind of like you buy a plane ticket. You go search for the best contractual deal for what you're trying to achieve, and then you choose it based on the claims paying ability of the carrier and the highest contractual guarantee. Okay, so what are the 2 questions that I've come up with? Stan the Annuity Man questions. There's only 2 that you need to ask. Number 1, to find out if you need an annuity. And if you do need an annuity based on the questions, what type fits? Because there's not a one-size-fits-all. Too many times you'll go to the Bad Chicken Dinner seminar, or you'll hear the radio ad or the TV ad, and they're saying it does everything. It's a one-size-fits-all. There is no one size fits all. If it sounds too good to be true, it is every single time with annuities. So what are the two questions? Number one, what do you want the money to contractually do? Underline the word contractual. Number 2, when do you want those contractual guarantees to start? Let's do it again. Number 1, what do you want the money to contractually do? Number 2, when do you want those contractual guarantees to start? From those 2 answers, I can match you up with the right product type, fixed product type, and then I can go shop for the best contractual guaranteed rates for that type. So you'll love this one. Of course, I'm always thinking about how to make the annuity discussion simpler. How to, as I always say, if you can't explain it to a 9-year-old, then you shouldn't buy it or sell it. No offense to 9-year-olds, but I think that's kind of what Warren Buffett's always said. You have to understand what you're buying. Do not buy the dream, buy the contractual reality. So what I've come up with is an acronym that's easy to remember that will let you know if you need an annuity at all, and if so, what type. And that acronym is PILL. P-I-L-L, just like it sounds. The P stands for principal protection, the I stands for income for life, L stands for legacy, and the other L stands for long-term care. Let's do it again. P stands for principal protection, I for income for life, L legacy, the other L long-term care. So principal protection, you don't want to lose any money. If the market goes down, you don't want to lose any money. Those specific products are primarily multi-year guarantee annuities, which is the CD version, the industry version of a CD. And then fixed index annuities, keyword fixed. It's a fixed annuity that you're not going to lose any money if there's any market gyrations. So that's the P for principal protection. I, income for life. And you got to remember, annuities were put on the planet in the Roman times to create a pension plan for the dutiful Roman soldiers and their families. So the income part of the pill, which is the primary reason annuities are even here. The word annuity, A-N-N-U-A, is the Latin for payment. So that's the primary reason people buy them, but you can buy them for principal protection. But the income for life would be single premium immediate annuities if you needed income immediately now or within a year. Deferred income annuities if you need income to defer 13 months or later. You can also use qualified longevity annuity contracts, which is a deferred income annuity inside your IRA. And then there's an attachment to some policies called a income rider that is for income later as well. So that's the income side. The legacy and the long-term care. Legacy, if you can't qualify for life insurance, there are some income riders out there that not only provide a lifetime income stream, but they can also provide a death benefit in their guaranteed issue. So for people out there that can't qualify for life insurance, this is a pretty good deal. And also the other L is for long-term care. A lot of people need that type of coverage. That's a concern for a lot of people. So there are some riders, some attached benefits that solve for what I call confinement care. There are also some annuities that are health insurance products that are called long-term care annuities. So depending on what you want to solve for. Here's the bottom line though. If you don't need to solve for one or more of those 4 things in the pill, principal protection, income for life, legacy, long-term care, in my opinion, staying the Annuity Man, top agent in the business, you don't need an annuity. There's no G for growth. Now, all of my brethren out there that sell variable annuities are going to pound the table, throw things, and send me hateful email. Don't hold for a second. Your argument's good. Variable annuities were put on the planet in 1995 for tax-deferred growth, and I like some of them out there. They're fine. But at the end of the day, you're limited with your choices. I don't care how good the variable annuity is. I don't care how good the choices are. I don't care how good many choices are in a no-load variable annuity. You're still limited. And at the end of the day, in my opinion, if you're going to do market-type growth, you should not have any limitations on the upside. So in my perfect annuity world, which I live in every day, because it's contractual guarantees only, we're only looking at the contractual guarantees. You're only owning the annuity for what it will do, not what it might do. And if you're looking for the might do, in my opinion, you shouldn't buy an annuity. So how do you find the best fixed annuity rates out there? You shop all carriers. You understand that the rates and the quotes change all the time. It's kind of like a gallon of milk. Every 7 to 10 days it expires. You got to get new quotes. And buying an annuity of any type, so finding the best rates is like finding the best plane ticket price. You shop for it. You put in your destination, what you're trying to do, what you're trying to contractually achieve, and you look for the best contractual guarantees, understanding that it's a dynamic, commoditized marketplace where things change and you always have to be quoting. So with that, remember I told you I was going to give away the free books? Let me tell you how to do it. Number 1, here are the books. There's 7 of them, and I'm going to send them to you for free, no obligation, no cost. All you have to do is click the button below. and it'll arrive in this nice gold foil Willy Wonka golden ticket package. So I'll send you all of these books. There's 6 owner's manuals. There's my original book called The Annuity Stanifesto, and I think you'll enjoy them. They'll be easy reads. You'll fully understand it. And lastly, do me one favor, if you would. Subscribe to Stan the Annuity Man YouTube channel, because what I'm going to do over the next 3 to 4 years is put out a bunch of videos that are informative, that are timely, that answer your questions, that aren't sales pitchy, and that will allow you to make a good informed decision on your terms.